Hello, everybody. Welcome back to the channel. Moderna is on fire. Another $30 move the other day. Let's unleash our trading instinct and take some profits. So we did discuss a particular scenario. It happened. So let's review that. Let's take a look at what I was saying in our previous video and then how that played out and what happened today. Let's review that. Let's get some education to improve our trading game. Yeah, so like I said, if we do open lower, especially here, if we open in this area, we will have buying to push us here. And this is where I would, initiate my short, right? And then my risk management is, closing on a 5 minute, 15 minute, 1 hour type of thing up in this area. That would signal to me that I'm wrong. So we're looking at an $8, which is a 2% risk, which is better than the normal 3%. And there you have it. We were anticipating a lower gap and then a move to the previous close, and that's where we would short it. We ended up having a breakdown candle there, perfect setup, and it just, flushed all the bulls right out of there. A lot of volatility in the past couple of days. Prime opportunity for trading. Remember, this is not financial advice. This is for education and entertainment purposes only. If you want to really take a deep dive on this strategy, it really does work, and you want to learn it, and you want to practice it day in, day out, so you can earn yourself a little bit of extra money every day and maybe turn this into a career. We can absolutely help you with that, and we do that by providing you with these guidelines. So when we trade a stock, that's to day trade, we're looking for institution participation. We want big moves, big money to move up and down, big swings to so we can capitalize off of that and make be able to make a living. And the deal is when the price retraces to the close of the previous day, either from filling a gap from a higher open or filling a gap from a lower open. We talk about that in our videos. And we also have the pattern. The pattern is usually a breakup or breakdown candle. We sometimes trade that, or like a bolt flag. We always talk about those, scenarios in our videos. As long as risk management, Moderna is an exception. We do about 3% with Moderna because it just moves $20, $30, $40 in a day. So you need to have a little bit more wiggle room just so you can get in on these trades and profit from them. So let's jump into the chart, shall we? Here we go, Moderna on the docket. And like we discussed, right, here on September 16th, we had, either we can gap up, test the close, and then take off, or we would gap down, test the close, and then continue lower. That would be the short setup. And it did, and it just flushed it. We identified this trend line, and always when price breaks a trend line, it tends to really go the other direction. And it did. We're always open to both cases, bullish or bearish case. We're always open to those. We have our biases, but we leave them at the door at the beginning of the trading day. I always said, that we're likely to test the highs here. Absolutely a possibility because, we never really came back to test this, right? We were building up energy, and I still think that's the case because we came back down to 400. We didn't crack it right just yet. So that my perception is still in effect, but again, we trade the day. So if you didn't short if we zoom in here a little bit, if you didn't short this breakdown candle, first 5 minutes, it tested, right? Perfect setup. What would have been your risk management? Well, we're looking at previous highs, 446. It's a 1%, $4 here. This would have been so good risk management. That is perfection, especially for something like Moderna. So you need to keep your eyes peeled. You need to pay attention to really get onto these opportunities. But regardless, you had, a breakdown candle, and then you could have shorted here, right? And then your out would have been here, which it was a little bit more. I think we're looking at $6 of risk is what we were taking, to make our 1%, 2-3% gain. And if you would have just let this one ride, you had, a whopping $20 move in one day, which is absolutely amazing. And how you really take advantage of these big rips down is, well, if you buy 30 shares, you then at the 1% mark, which is a $4 move, right? you sell half of your position. That's 100. That would be about $60, right? Roughly, and then you let the rest ride for that other, $20, and that would have been 300. So that's how you could really capitalize on that. Once you uh, get that 1%, you can set a stop loss here, right? In the system, that's the only time I recommend setting it up in the system of stop losses if you want a risk-free, emotionless trade, right? And but it's up to you. Oftentimes I just take all of my profits, which is $120, right, on my 30 shares at $4. I take it right off the bat because sometimes you don't want to be left with just $60 plus commissions and things like that. But it's definitely worth it sometimes to let it ride, because look, 360, that's 3 times the profits, right? If you just let it run. So that's the strategy, and we do that over and over and over again. And you had that same setup here, right? Again, you could have shorted. We gap lower. We came into the previous right off the shoot, right? So if you go in a 5-minute chart, sorry, let me remove these lines. And this is critical. This is so important. You have to make the attempt, first thing in the morning. And we went straight up here. You could have took the short up here, right, at around 429. That's possible. It's roughly in that area, maybe not. And you had, 422. That's $7. So you have the 1% here. You have your $4, and you could have, taken that short at that moment. And that's the play that you would have done, right, for today. Now, if we go to the 15-minute candle, yeah, that was about it. And then you chopped around, you poked your head out, and then you reversed. And that is just like, that's why taking profits is so important. Getting faked out, like, oh, you think it's going to break out and go higher, maybe to test the recent highs, right, from the previous day, and it just turns around on you and it goes the other way. So those were the setups that that we look for and that we trade on a regular basis. So it's like, wow, what are we going to do tomorrow on Moderna? It's like it's the same routine over and over and over again. If we gap up, we look for the price to come in to the close. So we may close around 422 here. So if we gap up at maybe 426, 425, 428, we have to come down immediately. That's the trick. Or if we and then this is a buy, and then this line here is important from where, right? So maybe this is not important anymore. So we need to refresh our lines, because now what's important is this area. Let me get the right one. This is the right area. So if we do get bullish on this particular trade tomorrow, we're looking at around $2, $5. So you're looking at a bit more than a 1%. Perfect. That's perfect. If we can do that gap up, come into this number of 423 or 422, 423 and a half. In that area, you can execute a trade if we gap higher and immediately come down into that number. And vice versa. If we gap lower, right? But again, I'm using this as an example. You have to wait until what the closing price is. So again, this is an important area. If we open, so this is going to be a tricky area, because if we open here, you may get buying right away, and then that could initiate it continuing higher. But if we come into the closing price, you would take your short. And then again, you're looking at a lot of risk here. So it's going to be tricky to short it, right? Maybe you want to manage it, actually 426. If we close 15-minute, half hour, hourly above here in that range, we want to close our position to take the minimum amount of risk. The most favorable right now is the gap up and then coming right down into this number. And then you obviously have this scenario where you gap up and you just go up. That's frustrating, because sometimes sometimes it does work, but in this area, it's so choppy. We're just chopping, right? So gapping up here, is it really just going to take off, especially after all of this choppiness? It's gonna be tricky. It's gonna be tricky, but that's how we play. Um, that's how we play it. Now, the final setup is 15 minutes, and we just have a big red candle like this, right? If we have a big red candle like this, or like this, we can short it. If you're conservative, you can short halfway up into that candle, kind of like what it did here, right? But in this situation, you would have got if you did short that candle and then it ripped in your face, and then it came back down. You had time, right? Following that hourly close is important because, like, if we look back here and we just let's remove some of this stuff. If we go to an hourly close, right, it came back down here, so most likely you pretty much would have just exited your position manually because you're like, well, it's not doing anything, we're coming into the later afternoon, it's not going into my favor, you just close your position. So these are like the little details that the fundamental course offers you, and that I explain here for free, and hopefully you're making money on Moderna, that you're learning something. Thank you for watching. See you tomorrow.